To record it. This meeting is being recorded. That was quick, Tammy. All right, I'm going to introduce these guys. Thank you for joining us today. Batchimeg, Ganbaatar.
You got it.
Thank you. Batchimeg Ganbaatar is managing partner at Nomadic Venture Partners. She was previously in charge of corporate sponsorships at Boeing. Before that, she held management positions at Publicis Media and Starcom. Batchimeg has an MBA from University of Chicago and an undergraduate degree in marketing and international business from University of Illinois, Chicago. And then we have Eric Rosenblum. He's managing partner at Foothill Ventures and works with entrepreneurs and inventors at Columbia University as executive in residence at their Columbia Technology Ventures. He was previously COO at Drawbridge, a San Mateo company that was acquired by LinkedIn. Before that, Eric was director of product at Google and held executive positions at SmartPay and other tech companies, and was a consultant at Boston Consulting. Eric has an MBA from MIT and an undergraduate degree in Asian Studies from Harvard. Thanks you guys so much for joining us today. We're going to talk about investment trends. It's looking like the door is opening some, particularly in clean tech. Tell us what you're seeing out there in the landscape. Eric, why
Yeah,
don't
I can.
Sorry.
Yeah, I'm happy. Happy to start. So just a little bit of context. And first, by the way, thank you for having me. And for those of you on this call, I'm also a Midwesterner. I'm born and raised in Steubenville, Ohio, and so have some Midwestern roots. And so it's great to get a chance to see this whole group. There's like a whiplash effect in venture that kind of starts with the large endowments and the people who fund the fund of funds and growth funds that then work their way down to seed funds like ourselves, and I think Nomadic as well. And so the tightening of the purse strings was pretty apparent in the last couple of years. And so it's very difficult for a lot of funds to raise their next, especially in the last year, it's been very difficult for seed funds to raise their next funds. And that put the clamps on all new investment activities. There have been some exceptions where clean tech has still been fairly aggressive and still fairly open. But in the last couple of quarters, there's been an opening up at the top end of the market, meaning the growth funds and large funds are starting to raise big rounds, and there have been some big announcements. And so funds like ours are now seeing lots of LP activity, putting more money. And so what that means on the ground is that the pace should increase dramatically. So a lot more seed deals getting done, a lot of markups getting done. In terms of the specific areas, I'll just throw some out and then I'll stop talking. In the last couple of years, there were a lot of deals done in, say, batteries and chips, semiconductors for inference and compute. And what we see now is kind of moving to the next step. I think that all of the investors who invest in, say, new chemistries for batteries have kind of gotten their fill and are looking for things that support that. So battery management solutions, for example, the software layer, but also the infrastructure, the grid. On the chip side, we're moving from compute towards data transfer, so like photonics, for example. And so there tends to be this wave effect that goes through in money, and then a wave effect that goes through in terms of domain and focus. But I'll stop talking now, but those are some of the trends that we're seeing.
Batchimeg,
Yeah, I can chime in maybe on the founder side. We're noticing that, it is taking founders a bit longer to raise funding. So making sure that they have enough runway is important. And kind of related to that, we're seeing, a couple of companies do seed extensions and waiting for their Series A. And then valuations, I think, are still sort of coming down. So in terms of an investment opportunity, we're seeing it as a good year to be investing out in the market. And if valuations are too high, then it's going to take a really long time to be able to fundraise. So we're getting some right sizing in terms of valuations. And then the government incentive too within clean tech, we're seeing a lot of government funding coming online and really offsetting some of the risk for founders. And same thing with corporates. Corporates are also putting grant funding out there and really enabling first of kind innovators to be able to deploy and pilot their projects.
What are the hot areas you guys are seeing right now?
Yeah, so just to go back to my comment a second ago.
Yeah, sorry.
Yeah. Sorry, Kathleen?
Go ahead.
Oh, yeah. Yeah, so just to maybe continue on the path that I was on, like I said, the last couple of years there were a lot of high profile, just speaking about energy, a lot of high profile battery companies that got funded. But the universe of seed stage investors in North America that invest in batteries is limited. And so let's say it's a group of 30 investors. I don't know if it's actually 30, but it's like that order of magnitude. And so everyone kind of has their fill. And so it's very difficult to get anybody to write another check right now in that sector. And so the next things that I'm seeing get very hot are technologies for the grid. And so again, it's this kind of wave effect where if people were betting before on the electrification of vehicles, that drives a huge wave of investments in batteries. The implication of having lots and lots of vehicles coming on that need power is upgrading the grid itself. And so you'll see, we just did a deal in solid state transformer technology out of Singapore moving to the States. We'll see a grid storage company. So again, that is batteries, but aimed at the grid. You'll see switches. So a lot of, and so this is just an example, like we saw a lot of activity in storage, and now we're seeing a lot of activity more on the grid itself. So I'll bring that up as one example of like a hot area. And then the second is a lot of activity still in alternative fuels. So there were a lot of deals done in hydrogen in the last year. We just did our first SAF, Sustainable Aviation Fuel deal. And there'll be quite a lot of activity, I think, over the next year in that sector. And so that wave is still kind of on the upswing.
I can chime in about more of the critical materials. I think people are starting to realize this whole energy transition is dependent on the materials that go into it, including copper, lithium, cobalt, uranium, for instance, for nuclear. So there's a lot of interest from, journalist investors trying to figure out how to actually support the supply value chain that feeds into the clean energy transition. So it's really an opportunity that we're focused on, but would love to have other investors on the table to be able to invest in new innovation that decarbonizes the mining industry as well.
What are some of the challenges that you see in this ongoing energy transition? And maybe those are opportunities too.
I can start with this one. So going back to the critical material side, there's a stat out there that 70% of the critical materials that we need for the energy transition are currently on indigenous peoples' lands around the world. So that becomes a big challenge in terms of, making sure that you're working with those local communities and making sure that, they're not getting the short end of the stick in terms of this transition. So I do think there needs to be more attention paid to where these resources are coming from and making sure they're also being done in a humane manner and no child labor or anything like that involved. And then on the funding side, I think there's still a significant lack of diversity. I think the Knight Foundation did a study and they said about 1.4% of the $82 trillion in assets under management are owned by diverse firms. And that kind of trickles down to the founders, right? There's only 2% of women founded startups are getting funding out of all funding that's going into venture capital. So how do we ensure that diverse founders are getting the resources that they need so that they can, bring their solutions to market? I think that's a big opportunity that we need to focus on as well.
Yeah, I think those are great points. Some additional things that I'd point out. There is capital available at the very early stages in clean tech or deep tech. But it's particularly from government grants, universities, and then there's a small number of pre-seed funds, but it's largely university and grant driven. And the U.S. is not bad in this respect today. The SBIR program, for example, is bigger than all the VCs combined for that stage of investing. Canada, by the way, has even more funding available per capita, and so there is quite a lot there. Then when the companies are merging for seed, there's still a bit of a bottleneck, but generally that money's available. There's a problem when they start to need to manufacture something, and it's a problem in multiple ways. First, the number of funders is very small. You're now talking about dozens of firms that do growth rounds. But then second, a lot of the contract manufacturing is in China, and because of U.S.-China geopolitical tension, it's been very hard to figure out a good model to work. And it's not just the geopolitical tension. People worry about IP theft and leakage working with certain contract manufacturers. So for example, we have a battery company in our portfolio that's now ready to start fulfilling their POs. It's about 20x more expensive for them to do their contract manufacturing in the US. And so the cell manufacturing should probably take place in China, but they're worried about both the geopolitical risk and IP leakage. And so there are some real issues that once people start to scale to a certain point, it becomes very difficult. And this is a role that I think as a VC or as technology transfer offices, having some expertise in understanding manufacturing and supply chains is useful. And then the second challenge is the team makeup. It is difficult for these very technical engineering-led teams to start to think about commercialization. And it can happen quite quickly where they need to start managing multiple JDA discussions, multiple co-development agreements with their partners. And just who's going to handle those discussions? What do you have to negotiate? How do you, let alone getting into actual commercial agreements and POs is a different challenge. But they normally don't have that capability internally when they start having those relationships externally. So that's the second challenge, is that they face like a lot of commercialization pressure very early, and they don't necessarily have the staffing to handle it, but they also don't have the budget to bring in full-time dedicated people at that level.
We were talking earlier with BJ Johnson from Clearflame, and he brought up the idea that coming to the Midwest did give him more access to that kind of expertise. Would you agree with that? Manufacturing and supply chain expertise?
Yeah, I mean, certainly it should be a US strength. I don't claim to have great expertise in like the relative hiring, and talent available, but I would think that that is something that the Midwest would have in spades over, a comparable Bay Area or Boston-based or some of the bigger centers. But it is something where still it has to be organized. Like, what these industries are all so different, and finding the right talent for the right people can be challenging. But I would think that is a relative advantage of Midwestern-based, founders.
Batchimeg, do you have thoughts about that?
I think having a lot of manufacturing in the Midwest definitely helps in terms of finding the right talent. And I am seeing, more manufacturers coming to Illinois and suburbs of Chicago too. So I think it's a good opportunity. I think, related to that, the customers are also here. In terms of BJ's company, it's a huge logistics hub here in the Midwest, and Chicago specifically. So for him to be closer to his customers is also another bonus.
Yeah. We've had a number of fellowship programs speaking here today, and it seems like these types of programs activate and chain reaction innovations from Argonne and New Lab can be really helpful in the energy and industrial areas. I-Core, other accelerator programs. Can you tell us about the pros and cons you see, and do you look at companies out of those programs?
I love these programs, and so I actually am now, specifically looking through every new fellow from Activate, using I-Core, and would like to kind of get introduced or start to get more familiar with many of them. But just as an example, like part of the methodology that Activate and I-Core employ, forces these founders to do like 100 customer discovery calls. That's a tremendous amount of work. And I think just first, they learn a lot about their market, and they may change their ideas about whether or not they've got good fit. But just it does kind of give them that oh shit moment. Like, I'm an entrepreneur now. I'm not just doing lab research, that I actually have to find 100 people to talk to. And it's not necessarily something that's second nature to some of these founders. And so I think that by the time they come out of the program, they're far more ready to actually work with venture investors. It's a totally different mindset. And so I think it's incredibly valuable. And in fact, I would like to just get to understand better of what the various methodologies are. Like, do I have a better sense for what, MHub does versus, other, New Lab? Like, what are the actual differences? Should I start to pay more attention to one versus another? Right now, I have kind of a naive approach. I'm kind of, more is more, more is better. I'm going to talk to all of them, but I do want to get to know them a bit better and start to distinguish who is really creating value. But at the moment, I think it fills a tremendous gap, and it's very much appreciated by seed investors like us.
I think we should also just appreciate the fact that we have these programs. With the US being a leading ecosystem for startups, we often take for granted all the resources that founders have in comparison to other markets where they might not even have a decent accelerator program to go to. And having been on the founder side a couple of times, I really appreciate accelerator programs, programs like iCorps, where it forces you to think strategically and actually talk to the customers. It also makes you, do things in the right order, because you don't want to, commercialize too early without knowing what exactly your competitive advantage is or what your customers are wanting, as well as figuring out the right level of communication. I think those direct calls with customers really help you understand what it is that customers want so that you can go to market with the right language in mind. And for us, if a company hasn't really done customer discovery, that type of effort, we actually make them do it. So there's no kind of going around it, either through a program or you do it on your own. This has to be done. Otherwise, you're not going to know who you're talking to or what your value proposition is.
So, we've got a lot of universities here. How should university commercialization offices and startups, for that matter, go about evaluating these kinds of programs, Accelerator and iCore and all the ones we've talked about?
I think it depends on the company. There are a lot of generalist accelerator programs out there like YC, Techstars, but they all have their different flavors. So depending on what the company is focused on, I would say, go after the programs that closely tied to what they're building. So for instance, mining technology is something that we're looking at, but there's not one accelerator program that's really focused on that. So for a founder, you can go and, if it's a biotech focused company, there's IndieBio or other programs that focus on the biotechnology side. But, if you're a founder building in this very niche sector, perhaps you can go after programs that specifically target what you're doing. I do think, more brand name accelerator programs like YC allow founders to get access to capital easily.
YC being Y Combinator.
Y Combinator. I think they do a good job of really connecting their cohorts to investors and getting, using the brand name to essentially get out to the market, which is really wonderful. And the universities too, there's a strong network of alumni network mentors that university accelerator programs provide. And I think the lab space the universities provide, I think those are all wonderful things that founders can take advantage of.
Yeah, I think those are great comments. One thing I would do, so one thing YC does, so Y Combinator, and other accelerators do this as well, is they have all of their founders rate VCs. And so all the people that go through their program, if some VC like shows up consistently late for meetings and dragged out the term sheet process and very difficult, they get rated internally very poorly. And over time, because YC's cohorts are 100 plus founders and they've been going for a number of years now, they've rated thousands and thousands of VCs, and they can rate individuals what we're interested in. I think by analogy, universities can start to do this. And so all of the people that you have that are going through accelerator programs, you should have a standard rating system. What does the program do well? What is the cost to the individuals going through it in terms of time and effort? Is it worth it? And I think Batchimeg hit the nail on the head. They're of different value for different kinds of companies. I do think that Y Combinator is incredibly good at this point at creating demand side pressure on meaning the investors like us that are trying to find startups. They've created a great marketplace for this, and others are not nearly as good at that. On the other hand, they're much more focused on consumer web applications, non-technical founders, and they may not be as strong in certain areas. They won't have mentorship and methodology that necessarily applies. So I would, again, make a list and start rating them across domain, expertise, fundraising, and sort of get to be able to match when you have a company that is getting ready for that next step. I do think it's great to not reinvent the wheel and have your own incubator accelerator necessarily on campus, although some do. I do think it is good to have someone who's putting the effort in more globally and that your role can be knowing who's best for each group and steering them into the right one, versus necessarily trying to reinvent everything yourself on campus, and kind of stick to what you're really strong at. But understanding which ones are the right ones for which company, I think having a rating system and getting the feedback from those who've gone through it and have the inside view is really important. And that's an asset that builds over time.
That's a really interesting point about universities maybe not having their own accelerator program, in the sense that these accelerator programs you guys are talking about have such bigger networks and so many more tentacles into the whole ecosystem. Could you throw out a few more, if you were a university rating these accelerator programs, you said domain, expertise, fundraising, what else would you rate them on? Either of you, what other criteria would you use?
Yeah,
Accelerate.
I mean,
Oh, I was going to say
oh, go,
equity too. You know, the range of equity
yeah.
varies based on accelerator programs. So depending on, you know, the founder's appetite to give away equity, they might consider that.
Mm-hmm.
Yeah, so it's financial terms, it's material support. And so there are a lot. So like New Lab, for example, and the new indie biospaces in New York, et cetera. A big part of their pitch is that they have fully staffed labs with equipment, machine tools, et cetera. Is that real? Has that proven to be valuable in certain areas? How relevant is it? Their mentorship, the quality of mentorship that they're getting, the engagement of those mentors. And again, your mileage may vary. These are individuals. And so some mentors, I'm sure, are incredibly valuable and others less so. And so only through kind of getting the survey data kind of on an individual basis, we start to assemble some sense of matching individuals at their side against the individuals from your universities that went through the program, and to start to get a picture. But I agree, the financial terms are significant. The support that they're supposed to be giving, how well organized the program is. I assume a lot of people go through the program and say this was a little bit bogus, that this was just branding, and actually it didn't really do that much for me. But some people hit it right, and it was like the support they were given, the mentorship, the methodology, and then ultimately the exit into the world of larger funders was a very smooth on-ramp for them. And sort of understanding how that path worked is, I think, valuable for technology transfer offices to understand.
I think we've got time for one more question. Let's talk about how university commercialization people can maintain productive relationships with firms like yours. What do you guys like to see dealing with them?
So
So I don't know if oh yeah, go ahead. Go ahead,
so-
Bethany.
I was going to say, so we see it as a deal flow opportunity, right? So if given our niche focus, if, you know, tech transfer offices can share deals that are interesting and on the line of what our thesis is, I think that's really helpful. I've also seen monthly like deal lists that's being shared from different groups. I think that's wonderful, especially if you can filter down the type of company we're looking for in terms of stage and sector focus. We've also been engaged on a number of events. So whether that be speaking at their events or actually co-hosting events together on campus. And there's a number of mentorship programs out there, but you know, given the time constraints, sometimes those are hard to do as an investor. And being aware of when demo days are coming up so that, you know, we can attend them if we are able to. I guess maybe more deeper connections that we've seen is actually collaboration on certain areas of research. So we're working with the university on a specific research opportunity. And because we're a small firm, we don't necessarily have the resources to do the research ourselves. So where we can collaborate, that's wonderful to us. I think that another opportunity is just IP that's sitting on shelf. How do we spin those IPs out and make sure that, you know, those are being utilized in the world? So my worry is some of the problems that we have in the world, we've created a solution for them, but we haven't quite commercialized them yet. So how do we ramp up that connection?
Yeah, it's great thoughts. I just to add a little teeny bit, I think of it as like a pyramid, and the lowest layer is the broad kind of one-to-many broadcast type of relationship. So we just got, for example, University of Michigan, if anyone's here from the Michigan group, their list, like Batchimeg said, that was extraordinarily well organized. So a spreadsheet that had tabs for here's all the companies that are raising now, here's early stage IP that's being developed, here's the stuff that's in growth phase. And so just like I know everything now going on at the university, and we can go through and say, yeah, these are the 4 that really fit us well. That's amazing. CMU does something quite similar. And I'm sure many of you have something similar, but something like one-to-many, well organized, timely, monthly or quarterly, goes a long way. And then above that is slightly more targeted, higher touch engagement, which are the things like demo days and events. And at the top of the pyramid are a few firms that may just fit really well, and they're probably seed stage funds that are taking the baton next from people leaving the university that will work on events with the university. So, come on campus to speak, help with entrepreneur mentorship, or specific research. So there are those that, like Material Impact now has a program at Columbia. And that's a $350 million fund, but they're putting resources into sponsoring a class at Columbia to help with entrepreneurship. So I do think that those kinds of, ultimately that's a very custom, very labor intensive program that you can't do with very many, but there can be firms that have a very, very good overlap with the interest of the university. But I think the bottom layer of the pyramid is what I'm most interested in, is like more universities having this high scale broadcast of a well-organized list of everything going on is extraordinarily helpful.
Well, those were amazing comments, you guys. I want to thank you so much for joining us today at the Energy Industrial Huddle, and we will share a list of everyone who was here. So if anyone wants to communicate with Eric and Batchimeg, they will have the opportunity. Thanks so much, you guys. Really appreciated you being here. And now we can